Good evening, guys. Good evening. Um can you all hear me? I'm just trying to confirm that everything is working well. Mm, Okay. Okay, let's allow this guy to work properly. Okay, nice. Okay. 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 That is pretty. So we have a lot of things to cover in this session, but we have to make sure that everything is working perfectly first. So I will need to share this live link with as many people as possible, first of all. Okay, so just sending out the link so we can get started properly. So please, chat, I'll need your help. If you can hear me, just tell me that you can hear me so we can begin. There's a lot to cover. A lot to cover. Just sending to all the communities, telling them we're live. Okay, let me send it to two. Okay, let's go. Boom. Very nice. So, um, we are going to be doing a very deep dive into fundamentals, right? Into fundamentals. So, let me quickly open something. Let me open my notes for this. So this weekly prep is for this week. That's 24 because the market opened by 11 p.m. tonight. So August 24th to August 29th. That's Friday. So we're going to be doing some very deep analysis. For those of you who know me, I trade just three pairs: Euro USD, GU, and USJPY. There's one pair that is common among all three, and that's the USD. So we need to understand why the USD is doing what it's doing currently. So that's what will give us insight into what to expect for next week. And my gosh, the way I'm going to break this down is going to be crazy. So let me get you started. Let me first of all confirm that you guys can actually hear me. Okay, you said they can hear me loud and clear. Be very beautiful. Awesome. That is very nice. Okay, so back to my FX book. Please, I'll be checking concurrently. If you stop seeing my screen or you stop hearing, please just tell me and I would make adjustments immediately. So last week, let me close this Pine editor first of all. I was attempting something crazy. Boom. So last week we saw this crazy move from all from USD pairs. Your USD did it, pew. GU did it, pew, and then UJ did a deep dive down. So for those who actually study these markets and don't just come here to play or come here to waste their money, I'm always surprised as to how you can, I don't know what you do for a living. Maybe you're a teacher, maybe you're a professor. You work so hard for your money, and you just come to this market and dash the markets your money. Like, how does it make you feel? It doesn't make any sense. I mean, you're supposed to be a smart person. So what's happening to your smartness? So you see things like this, and you're not even bothered to find out what caused this. Why did it happen? So some of you that trade gold, let's look at what gold did. And I'll break down as to why this happened and what it means for the next weeks and for the next months of this year. Gold blew up as well, and I'll explain everything. Funny thing is, I've always thought that fundamentals. I didn't say thought in terms of THOUGHT. I said TAUGHT, thought. So I've always thought that fundamentals don't control the market, and that is absolutely accurate. It does not control the market. You need to just understand that if you can see technicals very well from how the market is moving, not from how you are, these things that the technicals, that the fundamentals end up doing, is hidden inside of technicals. So usually I don't pay attention to technicals, to fundamentals, and I'm always usually right about market direction because I just align with what it's doing. But then when you now add my fundamental knowledge to my technical knowledge, it's a whole game changer, because now we're not just aligning with what the market is doing, we now know why it's doing what it's doing. Let me explain how these fundamentals work. So when a news is dropped, what moves the market primarily is supply and demand. So when the news is dropped and the investors analyze that news that just got dropped, they will now take an action based on what was said. And the reason why it's so fast is because they are not manually analyzing it. They have algorithms, robots that does this analysis. Once the news drops, the robots have done the analysis and they act instantly. It's that action that leads to these massive movements you see. So there are some pairs we have. Let me add this to my watch list. Let's do here. Okay, wait, let me just start. Let me see if I can make you, yeah, boom. Then DXY, I'll have to look at the DXY as well. So let's go here. Let's read everything. So these are the pairs we'll be looking at. The rest pairs are not my concern. So just, I'm not looking at GJ. Take GJ off. So gold, DXY, Euro USD, USJPY, GU. The only three pairs I trade are EU, UJ, GU. So let's analyze what actually happened last week, Friday. Let's see. How do I go up? How comes I can't see what happened? Take me back. Right now Saturday. Take me back. Okay, that was Friday. Friday was 22nd. So what happened that Friday that? Come on. Okay, let me just there. What happened that Friday that made the market jump like that? So let me show you the person that did it. His name is Jerome Powell. Look at it. Is this Fed Chair Powell speech? That's the thing that did that move. And funny enough, because I was not paying attention to fundamentals, even though my analysis was right on all of them, apart from UJ, even though I was not paying attention to fundamentals, I thought, because I was not paying attention to fundamentals, I thought the markets were dead that Friday. I was not expecting any major move anymore. I wasn't even looking at what this guy was saying. And then he said something, and just in a few seconds of speaking, what did you see happen? Look at your chart. Pew. Let's look at DXY. DXY died. Big move. How many pips was this? This was around, what? Is that 1,000 pips? I'm seeing right there. Okay, that's on DXY, so it's not concurrent with things like EU. From here to, let me see. From here to here, that was around, it's just blocking it. That was around 130 pips in just how many candles? 1, 2, like 3 candles, and we had 130 pips jumping up. So now let me begin to break down why that happened and how you can drastically use that information to align perfectly with what these markets are doing in this new week. So let's look at what Powell said. So on Friday, August 22nd, we call it the Jackson Hole speech. Fed Chair Jerome Powell, so when we say the Fed Chair, that's the Federal Reserve of the US dollar. Their chairman, who is Jerome Powell, I know we have men who fear nothing in this life, but you see most people in this market, they fear this man because one word and he tanks his entire market. So if you don't know what he looks like, look at what he looks like. An old man. Okay, let me even show you the video. So I hope you guys will be able to hear it. Just watch. Just okay. Let me just play one video. That's the old man. It's all just happened. As he said anything, bro, this market is dying. So let's analyze what he said. So Fed Chair Jerome Powell hinted that the Fed could cut interest rates as soon. This is where things will start to fly over your head if you do not understand economics. But fear not, I'm here to actually enlighten you on every single step of the way. When you're living this lesson today, my God, your understanding of economics goes through the roof, and you never needed to go through university. This is the only economics you need in this market. Understand interest rates, understand CPI, understand just these few things. Let's begin. So this was big because Euro USD and GU spiked up, gold spiked up as well. I'll explain why that happened. So because this interest rate that he said he wants to cut, he has not cut it yet though. He's just indicating that they may cut it as soon as September. Guess what's going to happen? It made the dollar weaker and it made the euro and the pound stronger. Why? When you cut interest rates simply means, like, let's imagine you want to borrow dollar. The amount of money you have to pay back, when it's higher, it makes more sense for you to hold the dollar because now your dollar is more valuable. But when you cut interest rates, investors do not want to hold the dollar anymore. So they sold all their dollars as fast as possible. Not everything, obviously, but they sold a lot. That's why it jumped like that. That's why it died on GXY, but EU and GU went up because now dollar got weaker and GU, EU obviously got stronger. But now UJ spiked down because dollar got weaker versus the yen. Now, these words that Jerome Powell spoke, remember, he has not even cut it yet. He just said they may cut it as soon as September. It made the dollar dump across the board. So now, why did the dollar weaken? Interest rate equals to currency strength. The higher the interest rate on any currency, the stronger that currency will be. Do you understand? So higher rates means investors would rush to hold the USD, meaning dollar is strong. Let me first of all break and explain why gold spiked up. So gold is a safe haven. So as the dollar weakened, people went to buy gold, people went to buy GBP, people went to buy euro, and that's why you see gold going up. Simple stuff. So now, lower rates or rate cuts means investors move away and the dollar gets weak. So Powell basically said the economy is slowing, we may need to cut rates. And I'll explain to you why he wants to cut the rates. So traders instantly priced in weaker USD and boom, went down. So why Powell wants to cut rates? Powell has two jobs. Number one, to keep inflation near 2%. Now, what is inflation? Do you have an idea of what inflation is? Okay, I'll come back to that. And number two, to keep the job market stable. Right now, jobs in the US are weakening and unemployment is creeping up. So when you have a lot of jobs available in a particular country, you have more money going around. More people have money to spend, and when more people have money to spend, there's a higher demand for products than you have supply. And when there's a higher demand for product than you have supply, prices increase. That is inflation. So basically, you have these people trying to keep the economy balanced. Not too much jobs, then you should not have unemployment that much. It should just be balanced. But then, in trying to balance the economy, guess what happened? The economy is becoming too balanced. They're trying to slow the car down, but the car is getting too slow. So now, inflation is still above 2%, but it's not out of control. The tariffs that Donald Trump pushed out to other countries, making their imports very expensive, they are pushing US prices higher, adding pressure. So Powell sees job weakness as the bigger risk. So he's preparing to cut rates to support growth. If you do not understand, the less jobs people have, the less money goes into circulation. So inflation begins to drop, right? But as these jobs are not available, interest rates have to be cut so that you have people having more jobs. So it's just a very confusing state of mind for this guy, but he knows what he's doing. So let's go to number 4, jobs and inflation, the connection. So more jobs equals to more spending, and more spending equals to more demand, and more demand equals to higher inflation. Fewer jobs, on the other hand, equals to less spending, lower demand, and weaker inflation. Do you get? So the Fed fought inflation between 2022 and 2024 by increasing the rates. When you increase the rates, you have less jobs. I'll explain why. Because to borrow money costs more, and it slowed businesses and consumer spending. When they increase the interest rates, people will borrow less money. Businesses will borrow less money. Businesses will want to cut some jobs to save money. So you get, and consumer spending will also reduce because your credits, people, Americans, they use credit a lot. Their credit increases. They don't want that. So that will cool the inflation, but it also slowed down jobs. Now, Powell thinks jobs are slowing too much. Let's ease up and cut rates before the economy stalls and go into the opposite of an inflation. So, number 5, measuring job stability. Let's look at what to watch. Now that we've seen that he said he wants to cut the interest rate and he sent the USD down, meaning EU, GU are basically going to have a bull run from this point on forward if they eventually cut this rate. But what you need to watch out for is the job metrics. The reason why they want to cut it is because jobs are slowing too much. So if we see non-farm payrolls first Friday of next month, September 5th or 7th, I guess, is it 5th, thereabout, we see continuous job claims that's released every Thursday, and it's continuous initial jobless claims. More people are saying that they don't have jobs. If that is increasing, and NFP comes out lower than expected, my God, the bull run is going to be sporadic. So just follow me. Big reports on how many jobs were added. That's non-farm payroll. That's what we're waiting for. That should be next, the first Friday of September. Then strong NFP equals to the USD strengthens, but weak NFP means the USD weakens. What is NFP? NFP means non-farm payrolls. How much money is being paid to people who are not related to farm work, right? And the more that money is, it means they're having more jobs. The less that money is, it means there are less jobs. That is why it strengthens the USD or weakens the USD. Let me quickly check. Hope you guys can hear me loud and clear. Hope you guys can hear me. Okay. If you can't hear me, please tell me. And I'm thinking probably it could be your network or something. Okay, so great. So back to what I'm doing. Okay, so jobless claims weekly every Thursday. It's going to begin this week. So the fundamental analysis for what USD wants to do will begin on Thursday when we see the jobless claims that comes out to tell us how many people filed for unemployment, and a rising trend. If more people are filing for unemployment, it means that the job market is crashing, and obviously they would have to cut those rates so that the job market starts to go up again. And eventually what happens to the USD is it's going to keep dying, and we're going to have a very strong bull run on USD, on GU, EU, and gold. Now think, jobless claims equals to pulse check. So you're checking the strength of the US economy on the, like, just a weekly thing. But the NFP is the full checkup to know what is wrong and what are we going to do next. Now, number 6, the fundamentals driving 3 big pairs. EU, Eurozone growth is steady. PMIs, Purchasing Marketing Index, is improving. The ECB is not rushing to cuts. So from the angle of the euro, they're strong, they're good, right? So if the Fed of the USD decides to cut, euro gains against the euro gains against the USD, and it's going to keep going up. For GU, that's the Great British Pound, the UK economy is also showing resilience. The PMIs are strong. So the same dynamic, if the Fed is dovish, meaning that they want to cut rates, and the Bank of England is steady, the pound is going to get stronger than the USD, and we're going to see a bull run. Now for UJ, Japan's inflation cooled a little bit, but is still above target. The Bank of Japan is cautious, but not rushing any big moves. Weakening USD from Power Storm means that the yen will gain and UJ will fall. This is long term, now to the end of the year. Let's see how this news begins to unfold. Now, the key dates that we need to look out for from this point on forward is NFP, Friday, September 5th, 2025. That's going to be the big test for job stability. And then CPI, we're going to have to know the figure of inflation. That's Thursday, September 11, 2025. It will show us if inflation is staying where it is, or is increasing, or is dropping. Then the FOMC meeting, which is when these guys are going to talk again, Wednesday, September 17th, is the big day when Powell might actually cut the rates, or decide not to cut the rates, or just see what he's going to do. So these 3 dates are the key things that are going to tell us where these 3 pairs are going to go long term. That's just from the fundamental side. From the technical side, I'll still do a full breakdown for this week's trades potentially. And then the trading impact. So if we have strong jobs, let's say the NFP is greater than 200,000, meaning unemployment is stable and falling, the US is going to get stronger. Then EU, GU, they'll drop, the UJ will go up. But if it's the opposite, meaning jobs are weak, I've said it already, we're in a bull run straight up. And let me just get to number 9, the bigger picture into the end of the year. Markets now expect at least one rate cut in September, and this is clear as day. If that rate cut happens, EU bull run, GU bull run, gold going up, UJ going down. It's unavoidable. DXY going down, unavoidable. So it's now left for you to know how to align your technicals with this. So if Fed delivers and ECB, Bank of England hold, USD likely stays weak. That's what we're expecting. Now you need to understand that you're not the only person who knows these things. All the big trading firms, all the big banks, all their algorithms moving at high speed, analyzing this thing as well. So they'll be waiting for this tiniest insights, and boom, they execute your trades. So you want to make sure you are active so you don't miss the moves that will be happening between now and the end of September. So EU and GU may push higher, UJ may fall further. But if US data rebounds and gets strong, then the Fed could pause and USD bounces back. That is if. So this is how we think. If X, then Y. If Y, then Z. So if we see this, we're going to do this. If we don't see this, we're not going to do this. If we see this other thing, we want to do that other thing. It's that simple. That is why being data dependent, just like the Fed, is key. So basically, I've explained it. I don't want to go through all of this again. Let me just wrap it up. Right? So Powell's hint at the rate cuts made the dollar dump. Jobs are slowing. That's why he wants to cut. NFP plus jobless claims for CPI are your guides. So Wednesday, September 5th, watch out for NFP. September 11th, watch out for CPI. And September 17th, watch out for the FOMC. So now I'm going to dive into the technicals. But please, I need you to tell me, can you hear me? Can you hear me? Okay. Okay, I think probably if you can see, it's probably a network issue from your end, but that should be rectified by network shortly. Okay, now let's go to the technical side of what the markets are actually doing. Let me quickly check something quickly before I proceed. Just give me 2 minutes. I want to switch. Okay, so before I even begin a projection for next week, let me first of all show you guys some of the trades that I personally took last week. And this will give you insight as to how I actually do trade, right? So, okay, so let me show you some trades I took last week, starting from EU. So EU, we didn't get set up because based on structure, and I've said structure is like the most important thing that you can actually use to make your decisions in this market. If you can align with structure, your strategy is not even that important. It's like second to structure. Once you have structure down, everything else just works, right? So EU, I was expecting price to tap me in on this move that happened. That was the previous week, but that didn't work. It just flew up from there. Then I was expecting price to come back to around this place and then push up from there. But my structural trend was still intact. I could not take any of these sells because it didn't align with my rules, but my overall target was still this high. So then price trickled down below this point of interest while it was still valid. Then it gave the entry outside of structure right here, and that was a straight 1:20. I didn't personally place this trade because I said it was Friday. I was not expecting anything to happen. I was not paying attention to Powell's speech. But then on GU was where I got most of my trades, and UJ as well. Okay, still this high. So then price trickled down. Okay, I was just confirming if the stream was working. Awesome. So now, for GU presented a lot of trades for us, a lot of trades. Starting from here, this was the first one. I think it was the beginning of the week. So this one didn't tap us in. It's just look at what I'm doing. I'm basically just aligning with what the trend is doing. I'm not even stressing myself. You can see the trend is what is bearish, right? So we have our own inner circle entry criteria. Once it's met, we look for an entry. The first one didn't tap us in, no problem. Second one tapped us in for a 1:4. Third one tapped us in for 1:6.3. I'm obviously not going to show you the entry because that's proprietary, and that was all that happened. I was expecting on that one here, but that was when Powell spoke, and boom. I'll come and explain what's going to happen next week now. But first of all, let's look at that. So this is a total of 6R plus 4R. That's a total of 10R from GU. Then on UJ, it was this buy from here. Still the exact same thing. Align with structure. In my 5-day mechanical trading program, I taught you about structure. Once you have 2 breaks of structure, the trend has changed officially. Then this was a confirmation that the trend has changed for this push upwards, right? So when price came below here, this was not a break of, this was not a change of character. This was just a liquidity grab, and it tapped into this OB here. And that was where we got our entry for a 1:11 on UJ. This one, everybody plays this one with all 8 fats on this particular guy. So this 1:11 plus 10R on GU, that's a total of 21, Abi? Yeah, 21. Then for anybody who would have taken that EU trade, that takes up them into 30 plus R. Those were the trades we took last week. Now let's do a proper analysis for this week, starting from DXY. So now let me clear these guys here. Now based on the trend, let's analyze the trend quickly. So if you're looking at, let's start from here. We're going to have this high, this low, this. Okay, let me just do that. Let me just mark it out for you. So we have this high. Let me make it full screen so you can see. Okay. So we have that high. I'm going to make it even bigger just now. Yeah, this low. So we're still, listen, we're still bearish at this point in time. Even after price did this, we're still bearish. So this is the high that would have confirmed that we've changed our trend, right? So price began to do many things. Usually I would have not been looking to do anything funny here, but this is DX, so I'm not trading it. So this high eventually spread up to here. Then this guy, that's the low. I'm being very fast with this analysis. I'm not actually breaking it down. Well, let me break it down. Let's make it even better. So this guy broke, sorry, this guy broke this high, making it a major high. So major high right here. This is the actual major low, but just leave it there. Then this is not the major low, this is the major low, because it caused the break of this other major low. Boom, and you can see where price reacted from, and we just kept having this push upwards. Then eventually there was this guy right here. Okay, now finally price had changed the trend by breaking this, and then it confirmed the trend change shortly before price dumped by breaking this again. But then this is overall low here, even though the major low is right here. So this is the first break, and second major break is actually here. I just want to use here for consistency purposes. Sorry. So this is the second break to confirm that, okay, now we've changed our trend back to being bearish. All I wanted to do right from time was to stay bearish. I had no intention of being bullish. See, all these things that the fundamentals are doing is all hidden inside the technicals. But if you can't see it, no problem. Now let's go to what price is currently doing now. Now see this. This is a confirmation of this new break. This is just a break, but it's a harmless break. But it carries so much information, because after this trend change of breaking 2 lows, this confirms that I want to keep going bearish. So anybody who is attempting to buy this thing from here, Oga, Look at what you look. Just look at what you're doing to yourself. This is a falling knife. Why would you be trying to buy from here? It makes absolutely no sense. It's gonna grab this and keep dropping. That's what I'm expecting to do. So let's take this off and let's see. Let's analyze this high. So first things first. This may not be valid, but it's actually valid because this high has two candles lower than on the left hand side and two on the right hand side. So this high is actually very valid, and this low is valid. Everything here is valid. So what I'm expecting for DXY to do is going to do one of two things. It's either going to trickle up like this. Let's say to go up like this, go up a little bit, probably tap into an FVG, then die. This is depending on the fundamentals that come out, or it may not even go that high. It may just do something like this and pew. That's what it most likely will do. One of the two. I'll leave this on for next week when we're reviewing the analysis we did. Let's see which one actually happened. So you have this big FVG right here, and price is not like keeping these kind of gaps. It most likely will want to cover at least 50% of this thing, because they will lose money if they don't cover it. It will eventually come back and cover it later. So maybe it will trickle up to like here, then die. Nobody knows. You just align with what your technical show you, and then you take your decision. Quite simple in it. So until price, see, this is point of structure 1, point of structure 2 is very valid. This is valid. Until price comes and breaks this high, then breaks again. Like after it breaks here, then breaks again. We're not bullish on this pair. Until price does this, we're not bullish. So until price gets here and does this, anything we're doing is going to be towards sells. Do you understand? Okay, so that's for the DXY. Let me quickly confirm that you guys can see me. Okay, very good. You can see and you can hear. Beautiful. Awesome. So let's continue to EU. So most likely EU is going to be doing the same thing that the DXY just told us. So I know some people are trying to sell this from here. You may catch a nice retracement, but why not just align with the actual move of the market? And Monday may be slow, we do not know. Let's quickly look at something. Let's see the news we're expecting for this week. So on Monday we have new home sales. Doesn't really affect much, but it's a high impact news and it's going to move the market. So okay. Tuesday we have durable goods. Okay, I'm just confirming that we have news that can actually have some form of liquidity. So maybe from Tuesday we'll start to see liquidity start moving properly. So EU, let's analyze this high. So this low is the lowest point, and he has 2 points lower. So this low is valid. This low is actually valid. This is 120. That's crazy. Funny how I missed that. Okay, so this low is valid. So what we'll be expecting on this pair is one of two things. Same thing as what we're expecting on the DXY. It's either trickle down, something like this, trickle down to like here, most likely around there if it's going to do that. If it's going to do that, somewhere around here, then push up forward, right? Or it can decide to just do this a little bit into this OB here and push and just continue moving. It can decide to do anything it wants to do. That's one thing you should understand about price. Price can do anything it wants to do. So it's just for you to find your system and find what aligns with your rules. If it aligns with your rules, then take it. If it does not. So inside of here, if I see an entry, I most likely will take it. Inside of here, I won't do anything. But inside of here, I might take it as well. So that's what I'm expecting on EU. So now the opposite of what could happen on EU is price begins to break down. If it breaks all the way down to here, then it does like another break again. Then we've confirmed that it's bearish. And what that will automatically mean is that the jobs are actually coming back, or people are not having jobs again. So that means that the fundamentals we just analyzed is actually reflecting itself back on the technicals. That's the only time that would change our bias from bullish to bearish. So you can see I'm not predicting. I am planning to react. So anything it does, I know what to do. So in this style of trading, there's no being wrong. Do you get it? there's no being wrong because you're not predicting anything. You're waiting for the market to move first, to show you its hand first before you react. That's for EU. Then for GU, which is a very beautiful pair, I'm expecting, okay, GU has not confirmed. So one thing you should understand is, even though EU and GU are positively correlated, these pairs are separate and they act as individual entities. They don't think of them as, okay, if EU is selling, GU must be selling. No, trade them individually. Look at what each of them is doing. So now let me delete this zone first of all. If GU does not break this high, we're still bearish on GU. So maybe GU would want to come this low, like 50% of this FVG. We do not know. But if GU breaks this, then I'm confident that we're bullish and we can look for that kind of move, or maybe this kind of move to happen, one of the two. But if GU keeps going down and like comes all the way down here, then breaks again, then we're bearish. Then we'll know what to do, that we're expecting, okay, we're still going to keep going down. That's all for GU. For UJ, so for UJ, I just expect UJ to break here first. Once UJ breaks here, then I know what to do next. Because once it breaks here, it's obviously going to be bearish. Liquidity grab, boom. Or it may go up into this point, this 50% of the FVG, before dropping. But if it decides to turn all of this around and start going up, right, it means that it's switching back to being bullish. Now you need to understand the characteristic of a liquidity grab. A liquidity grab means that you have liquidity pent up, then price does as if it's breaking structure impulsively, boom, then immediately goes the opposite direction. Look at this move. If this breaks this structure, this is not a liquidity grab anymore. This move is not a liquidity grab. It's simply actually a change of trend. This is a very high momentum move. So if this happens, pum, and immediately you see pum, that's a liquidity grab. But in this case, it is not, at least from what we can see so far. I don't trade gold, but let's look at gold. I had an analysis on gold from the 4 hour. Let me look at it from Wanda perspective. Let me see. I think that's what my analysis was. Gold on Wanda. Yeah, I think it should be on Wanda. Oh yes, awesome. So I was expecting gold to go bullish from this zone right here, and it's been doing just that. So if everything we've analyzed so far is correct, and the fundamentals align with what we're saying, and technicals align with what we're saying, gold may be on a bull run to around here. Because if the USD keeps weakening, people would want somewhere to put their money, a safe haven. So maybe we'll be expecting gold to get to, okay, the first target will have to be here. That's if what we're saying checks out. The first target will have to be 3410. Then next final target will be sorry, oh shit, let me take that off. The next target will have to be, so we're just bullish, that's it, will be 3443. So let me look at actual targets for EU. And okay, I had a very mad, okay, this makes so much sense. Now I'm going back to my first love. Geez, come on, look at this now. Look at this. I've always been bullish on the daily on EU. Damn, right from down here. So you see, it's basically just hidden inside of the technicals. God damn, I didn't remember this because I trade the 30-minute time frame. I just do the higher time analysis and chill. So on EU, if our analysis checks out, we're bullish at least until 1.18316. I said it live here. This is the, see, structure is bullish, liquidity grab, boom boom. So we're going to target straight up, and I've done this thing since 3rd of July. Now on GU, let me check the daily time frame if I did the same thing. Yeah, basically the same thing. Liquidity grab here, price is reacting off of this zone. That's like a double top, one can. We have this guy, and boom, the targets will be here if our fundamentals check out. But based on structure on the daily, we're bullish to at least 1.37886. On UJ was also tricky. and it's been ranging here. It's not really giving me adequate information to like analyze it properly. But if we're doing deep structural analysis, look at this high, right? And look at this low. Is it valid? Yeah, this low is valid. But is this high valid? It's actually valid. Based on our rules, our inner circle rules. This is valid as well. This is valid as well. And this was liquidity grab right there for a sell, but it did not immediately sell. So price has not switched bullish on UJ on the daily time frame. Price has not switched bullish on the daily time frame on UJ. So, but we're having so much order flow here. Look at this, something called order flow. Price is just mitigating, and it's not breaking order flow. It's consistent with it. It's just mitigating. So if we have a break of order flow, like which point would I be expecting? Say price breaks here, then I'll be more confident that my bearish projection on UJ will hold. I'll be more confident that my bearish projection on UJ will hold. So this is a long shot because UJ is doing a lot of things here. And anytime UJ does this kind of accumulation, the move is always mad. Let me show you. Let's go back in time. For those who've been trading for a while, you'd have known this. But if you're a newbie, you will not know it. Let me show you an example. This was a very crazy one. This was between, how do I pinpoint this now? Okay, let's put here. Yeah, between here and this high is right here. So price was in this range for a very long time. You see this bullish move, supposed to like just continue bullish, but it was in this range from 2017 to 2021, and it was just ranging. For those who study Wyckoff, you'd have seen this as a, what is it called this again? I forgot what they call it, but it's, let me just quickly browse a Wyckoff schematic. Let me see if I can refresh my brain. So I've gone through some very complex trainings to get myself to where I am, but I don't have to use all of it. So this is the Wyckoff schematic. Okay, yeah, ST secondary test. So we have the secondary. What's the second one again? I don't forget all the labeling now. Let me see if I can find one that has all the labeling. Okay, then up thrust, the spring. So that's what I'm looking for. That's the spring. Look at this schematic and look at what UJ is doing. What UJ did does not look alike exactly. So this was the spring before this bounce, and see how many pips it moved afterwards. UJ has this habit of doing this. It was like 4,900 and something pips on UJ, and that was just the first phase. And it came down, reacted, and continued the move, and that's where we are now. It's almost like he's doing the exact same thing again, but maybe not planning to do it as long as he wants to, look as he did it before. But where to? If you're looking at this from the bigger perspective, we're obviously bullish. You can see that we're obviously bullish. So from bigger perspective, we're bullish, but there's something I'm seeing. You have this high, this low, got broken, this low, this high, this. It didn't confirm the trend change, the liquidity grab, but it wants to push. Okay, we're still bullish. We're still bullish. Let's zoom it in and let's see. Long term, we are bullish. But short term, within this range, if you're looking at all the structural points, this high, this low, this high, this low, this high, this low, price breaking below this low and this low, though it didn't confirm it, it's bearish to an extent. Although you can also call this a range, but let's just align what it's doing. I'm saying order flow is still intact. If price breaks this level, it may begin to trickle down, but that's not my business. I'm not on the daily, I'm on the 30 minutes, and it's based on what I see that I would react to. So once the market shows me what it wants to do, then I react. So I take this off and I don't allow it influence my decisions. That's exactly how I trade and why it's so effective. So these trades that I took, I sent them to our inner circle during the week. Let me just trickle back to from when I sent the analysis of what E was out, from what I was expecting EU to do. Oh, don't open anything. Ah, shit. From what I was expecting EU to do, which is I was expecting to move, although he came and cleared this and then still moved. Right, that was August 20th, August 18th. So this was the first GU trade. that I sent, and I sent all of these things before they happen. That's one advantage of being in this inner circle. And the first one, that there was no entry but target hit. I'm just trying to show you that I actually sent these things before they happened. Then the UJ trade, I sent it, see entry and everything. My inner circle members understand how to enter these trades. This is not a signal room, not at all. It's a strong training ground where I show you how to trade the way I trade. You just see me sending entry here, SL here, TP here. No, once you've gone through my training, you know how to enter these trades by yourself. So whether I send them or I don't send them, you'll still be able to capitalize on these trades. So I send that UJ trade and send the GU trade as well. I send everything from entry to the analysis, and the first entry we took on UJ hit SL, but GU was running. That was 1:4. Then TP hit on GU, everything aligned. Then the next trade on GU, which came so fast. Then UJ, I sent the entry and everything. I was already break even. I sent it there. We're up 200. Sent it there. GU was bringing it on that setup. I sent it there. And I sent before the entry came in. Entry came in. We're triggered in. Boom, 1:6. I mean 1:7. TP smashed. Everything was sent to the inner circle. UJ TP smashed as well. So I want to ask you, was this hindsight? People say that I sent trades after the already happened. Is that what I didn't just see the proof that I sent it before it happened? You get. And so if really I didn't send it, how comes we took it and you can see the profit and all of that? Then I began to send other pairs before UJ, for GU, and Powell eventually did what he did, and blah 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 blah. So that's it. So the inner circle is actually very active, and we took around 20 hours last week. That passes your challenge phase 1, challenge phase 2, even gets you around extra 3 to 5 hours of profit that you can have on your live account. So if this makes sense, and you want to join us, it's actually completely free of charge, but you have to make a deposit for the live account that will be giving you, because we'll either give you a 5K account or a 10K account depending on your capacity. So the inner circle access is currently free, but I'm not going to drag on this topic in this live session. I've done my projections, and if you want more details about the inner circle, just go to this website right here. Oh my god, what is this guy doing? This is really one I want to increase. This is the website you need to go to right now. So just as we're still on this live call, just go there. So if you have any questions, just ask me on the live chat. I'll monitor the chat and I'll be answering your questions. So go here now. Okay, if I check my records, although I've not updated it, we are currently at 40 and the offer ends at 50. So let me explain what I'm talking about. So it's inner circle access is free for now, but there's a mentorship upsell where I add mentorship to your inner circle access, and normally that should attract an extra fee of 50,000 naira. So when you deposit 50,000 either for your 5K account or 100K for your 10K account, which is going to be given to you, so basically there's no profit for me until you succeed from what I teach and we split your first payout 50-50. That's where I make my own profits from. If you're going to go for mentorship, there will be an added 50,000 naira fee, meaning that if you're supposed to pay 50K normally, you'd have to pay 100K. If you're supposed to pay 100K normally, you're going to pay 150K. But now till the 27th, 3 days more, and for the next 10 persons, because 40 spots are already taken, if you deposited 50,000 naira, you'll automatically be upgraded to mentorship. So just in case you do not, let me show what I'm talking about, DMC. So let me just go there and explain it. So come to this page, do your due diligence and study it very deeply, just to make sure that you don't miss out on the trades that we'll be sending this week. Because it's one thing to slow your journey down, right? It's another thing to miss the trades that I'm going to be sending. Because Only God knows how much you'd have made. But that's not even the most important thing. The most important thing is you cannot get your time back. If you want to go through all the process, the painful process of creating a system for yourself, my guy, you're going to spend years, blood, sweat, and tears. But we've gone through all of that hard work. We've created a system, and it's properly tested, forward tested, back tested, live traded, everything set just for you to come and copy and paste. Instead of taking your journey for 3, 4, 5, 6 years, in 90 days will get you your first payout. And obviously that's where we profit, because we're going to split it 50-50. So let me show you what I was talking about. Just come to this page, do your due diligence and study the page. But then the pricing is absolutely free for now. So let me just skip all of this part. Okay, great. So entering into this inner circle is free, but your deposits will go to reserve a 5K account for you. But guess what? How much is a 5K account? It's actually 50-something thousand naira. So it's even more expensive than the 50,000 naira that you're depositing. So we'll cover all of that. It's part of our own sign of a goodwill to you. Then for you, if you're depositing 100K, you're going to have a 10K account when you're done with the training. I've explained to you guys the inner circle training videos alone. If you join us like right now, 9 p.m., before 12 p.m., you're done with the videos. So the rest steps is fully dependent on how fast you can work. I have an assignment you have to complete. Yeah, I have back tests you have to complete. And in 2 weeks, you can finish that. So basically, in 2 months, you can be at that funded stage where we're splitting either $250 or $500. That's what I see. Understand something, eh? The more people that join this inner circle, the more potential profit split I have. So that's why I'm pushing for you to join. If you're wondering why do you want us to join, I'm trying to create impact, basically, right? Helping people to defeat this thing called money forever. And in doing so, I'm vain. It's not completely free of charge, because when you eventually succeed, we're going to split your first profit. That is my payment. But from this point up until that point, there's no profit for me. Do you get it? Meaning you only win when I win, or I only win when you win, right? So these deposits do not cover the full cost of the funded accounts, but we top up and handle the rest. Now this is the limited time upgrade I was talking about. If you deposit 50,000 naira for the 5K part, or 100K for the 10K part before the timer ends on this page, which is actually going to be 27th of this month, 3 days from now, or the remaining 10 spots are taken. If you want to join the mentorship, you'd have to pay 100K for the 5K part or 150K for the 10K part. But then the total value of what you're getting for inner circle only normally is 150K. Mentorship for inner circle is 300K. And for those who want personal tutoring, you don't learn fast, you want me to sit down with you on live session every day and teach you, is 907,000 naira. Boom. Now the money split for those of you who will be getting a 5K account, when you get your first payout, we're splitting the money $250. If you're doing 1K, 100,000 naira, which is 10K accounts. Sorry, excuse me. We're splitting it 500, right? So 500 to you and 500 to me. So just, I don't want to talk too much. My voice is even giving out. Just go to the page, do your due diligence. So to get that target of 12.5% is actually very easy. Last week alone, we did almost more than 20%. So if you can do it in 1 week, what makes you think you can do it in 1 month? Right? And for my own split, I'm going to have to buy you another account and I'll be yours forever. We don't have to split anything again. The remaining payouts become yours. And then what you start to gain in naira, if you deposit if you deposit 50,000 naira, your first split is going to be 390,000 naira, and you're going to have a total net profit of 340,000 naira in your pocket in your first split. From then on, let's say you're getting that same 12.5% every month, you're going to be having 975,000 naira to you completely free. That's for you. I'm not having any costs there again. For those of you who are going the 100K route, your first profit is going to be 780,000 naira, and I make the same thing. Then once you remove the 100K you paid for the funded account, it's going to be 680,000 naira in your pocket. And after that, when the account is fully yours, you're making at least 1.9 million every single month. So the platforms we use are Blue Guardian, Funded Next, and Good Funded Trader. As you can see here, Paul got a payout of 600, even though I was promising 500. Now, the only guarantee I can make is this: I only succeed when you do. Your deposit goes directly into securing your funded account. I don't make a dime until you hit your first payout, and only then we split 50-50. That is my guarantee. It's very simple, straight to the point. Right? So, waste no time. Go here. Let me quickly check the questions that you guys are asking. Okay. So, do you mean you only do analysis and ends on one time frame? So for our 1 hour per day system, we do that, yes. But for the slide system, it's from 30 minutes to the 30 minutes. I'm more interested in your money than teaching. Oh, that's up to you. But if truly that was true, then go and analyze the value of my 5-day free training. Check if there's anybody on YouTube that will give you that level of information for absolutely free of charge. And if you can find someone like that, then come and tell me and I'll give you 50,000 naira. Yeah. Just find the person who gives more value than I did for free and is not charging a dime. Come and tell me the person and I'll give you 50k. Just find anybody if truly I'm more interested in your money than teaching. Then stop saying it's free when you're asking us to pay 50k. Now look at your logic. Look at your logic. The 50,000 naira that you're saying I'm asking you to pay, what is going to be used to do? A funded account. So if, for example, the inner circle was free and I was not asking you to pay anything, you will still have to buy the funded account. So what I'm talking about. And also, I like this person, Mohammed Jamil. When you think everything will just come to you on a platter of gold, do you know how much money I spent to learn my skill or how much time it took? Even if I wanted to put a price based on the effort I've put into this thing, do you think I can actually charge it? I can actually give it out for free? So you need to rewire your mind and be grateful for what I've done. Actually, my reward is not even here; it's in heaven. Because if you actually wanted to pay me for the things I've put out, you can't. Okay, this will go to I literally just show you trades that we took in a week. So what do you mean again? Anyways, just if you have any other proper questions, please ask. So anybody who actually wants to improve their trading, ask me a proper question and I will answer your proper question. Yeah. Thank you very much, Marvelous. If we do not have any questions, I'll be ending this stream in the next 2 minutes. But while the opportunity is still there, make your way to this website and secure your spot. Think about this one more time before I end the stream. That guy pissed me off just now. He's saying, how can I call it free when actually I'm asking them to pay 50,000 naira? Boy, your 50k is meant for the funded account. Your 100k is meant for the funded account. So what's my own gain inside now? Okay, so when you finish the training and it's time to buy your funded account, which money would I use to buy the funded account for you? It's just pure logic, man. So if you're smart, it will make sense to you. If you're not smart, you struggle to understand it, and I'm not surprised. Not everybody's smart. It's not your fault. So for those who are smart and are really, really willing to take advantage of this, you know what to do. Go here and do your due diligence. So I would also be sending an email tomorrow morning containing a recording of this session. See, the first part of this session was the fundamental analysis, and it was deep, impactful, and it will obviously see the amount of time you've spent here will pay for itself with the results you get from the trades that I've sent for this week. So I don't know how much money your time is worth, but if, for example, you're a billionaire or a millionaire and your time is worth a lot, the amount of time you've spent here will be paid for from the profit you make from the trades that I've projected for this week. So if our fundamentals hold, the market will do exactly what we've said it will do. But you need to see the bright side. We've done an if X then Y analysis. So if the news for jobs comes out like this, then this happens to the USD. If it doesn't come out like this, then this happens to the USD. Very simple. So either way, we're right. Either way, we're right. And this is the proper way to approach your trading. Not, okay, USD must do this, or this is what I want to do. No. You analyze everything from like you're outside of the box, right? Like you're analyzing from outside of the matrix. You're seeing it from on top. it could do this, it could do that. Understand that this entire market is probability. Probability simply means that you will never know the result of your next immediate trade. When you have insight into the metrics of your system, like your average win rate or your average risk to reward, I talk about these things a lot. When I keep saying one thing over and over, you should know that that thing is strong and it's actually the truth, right? So when you have access and insight into your average risk to reward and your average win rate, then you would know that, okay, if I'm taking 10 trades, I'm expected to win at least 3 or 4 or 5. So when you take the losses, you should not be shocked. You should not panic and start to change things in your system, because when you change things in your system, you're going back in a cycle of doom. You're resetting your probability scale. That's why you keep making that money, losing it, making that money, losing it. When in tune or in time, it's actually supposed to be take a loss, big win, account balance increases, loss, win, account balance increases. Not you take a loss, win, lose everything again, win. That's a very crazy, psychologically breaking cycle. And for those of you who are still depending on forex signals and copy trading, if I catch you, I will burn your yash with hot iron. Do you know what you're doing to yourself? Let me quickly explain something. So on the 10th of September, I'm going to be releasing 2.0 of my psychology mastery session, right? Master psychology forever. Psychology is not about reading books or attending seminars. It's about understanding how your prefrontal cortex and your amygdala work, how they make these decisions. Your amygdala controls fight and flight. So when you start to see losses, boom, it wants to get out of the trade. So if you train your amygdala by sticking with forex signals, sticking with copy trading, not getting data in your system, your amygdala gets so strong. So once you see losses or you see red, guess what? Your heart starts to pound and you're leaving those trades instantly. You never have the conviction to hold your trades till they hit TP. But when you train your prefrontal cortex, and your prefrontal cortex is trained on data. There's a trader, he's been for 14 years, Kyle, and he made, despite having just 35% win rate, he made over $7 million. How? If going by your logic, how would it be possible? He has just a 35% win rate. What about his average risk to reward? Think about that, right? But he took him 14 years simply because he started with the discretionary route, trying to take enough amount of trades for your further context to be built. Meanwhile, you can just go back in time in 1 full month, go back in time and backtest 7 years worth of data. It achieves almost the same thing. So you are shrinking 7 years into 1 month, and it's very possible. I've seen it happen to me, happen to my students, happen to people around me. And this work is not easy. True. It is not easy, yes, but if you do it, the game changes forever. See, it's like to be a doctor, you have to go to medical school. You have to learn so many things. If you skip that part, you can never be a doctor. If you want to be a footballer, you have to do so much training. You have to get a manager. You have to get in touch with a very good trainer. If you skip that part, you can never succeed. In forex, if you skip data gathering, you either succeed in a very long amount of time or it's proven. But now you will not do it because you're lazy. You will not do it because you really don't want it that bad. You will not do it because you're not really, there's no purpose in your life. If there's purpose, you would find the best way to do it and you will do it. And this right here on your screen is one of the fastest ways right now. Fastest, proven. I'm not saying it's easy. It's fast. It's not easy, but it works fast. And fast beats easy every single time. So, this session, I'll be ending it right here. I trust you've gotten value from this session. And whether you join us, whether you don't join us, it doesn't really change anything. The only problem is that's one less person who will be sharing $250 with me or $500 with me. I can bear that. That's not a problem. But take advantage of the things I've shared concerning what the euro, the GU, and the yen will be doing this week, and align your technicals with structure, align your technicals with fundamentals, and make sure you trade properly. Because your metric, if I had a trading floor, the way I would grade my traders is not by how much money they make, but how well they're able to stick with their rules. To success. My name is Deba Oni. I'll see you.